Now onto our first session, a keynote presentation from Daniel Knapp, Chief Economist at IAB, and he's going to be talking on the subject of the European Programmatic Advertising Landscape. So over to you, Daniel.
Thank you very much, David, and a very warm welcome from me as well. It is a special day to talk about programmatic in numerous regards. Number one, we've come out of Q1 2021, so we have a much better reading on not just how 2020 has shaped up, this seminal year, but also how programmatic growth is going to continue this year. Today is the one-year anniversary of the ISBA PwC study on the programmatic supply chain, so a very good moment to open up discussions about trust in programmatic and the future of this supply chain, how it can move from supply to really a value-added chain. And lastly, we are just in the final preparations of releasing our AdEx benchmark study, which will come out at Interact, our flagship annual conference on the 23rd of May. And I'm very pleased to be able to do a little bit of a sneak preview and share some first aggregate numbers on the value and the size of programmatic. Those numbers will be refined by the end of the month, but you are the first audience to actually get a glimpse of those numbers. So I very much look forward to that. I want to give you an overview of the programmatic landscape today and walk through some of key topics that are structuring the programmatic landscape, which the successive panels on this day will explore in more detail. So join me on a bit of a whistle-stop tour. I think it's pretty clear that 2020 was a terrible year, but it wasn't as bad as expected. Here we can see in Europe the monthly spend of different digital and then also other media ad formats in aggregate throughout the year. And you can see it wasn't a horrible year, it was a horrible second quarter. And if we look at the initial predictions of 2020, they were doom and gloom. We expected the worst ad recession in the history of the last 100 years, worse than the financial crisis and worse than the Great Depression in 1929 and 1930. But this didn't happen. And if you look at the other media line, which was struggling to return to growth overall in Europe and throughout the year, we can see that the digital ad formats overall made a healthy rebound starting June, July. I've illustrated here the programmatic line, the dotted line, and you can see a kind of remarkable curve. You can see how programmatic fell off a cliff in March. April was the worst month, but we saw then a return to growth already in June with a very strong fourth quarter. December a little bit weaker than November, just because we saw a lot of pent-up demand for stores were opening, plus Christmas shopping culminating in November. And then a kind of a shorter month in kind of December with new lockdowns coming into place. I think the important thing here to remember is programmatic was one of the earliest mechanisms to be affected by the pandemic because of the switch on, switch off nature of programmatic. It could be, in particular in the open auction, switched off immediately. So that looked bad initially, but it came as an advantage of programmatic as the year progressed. Because we saw, and there were some SEC filings from some ad tech companies about this, that as the year progressed, there ceased to be a correlation between local lockdowns and decline in ad spend. And what was a problem for programmatic in the first phase, as everybody was uncertain how to navigate this environment, became a strength afterwards. Because advertisers realized if they ramped up programmatic again, when conditions improved, they had the confidence of doing so because they could switch it off again if conditions should worsen. So we saw a very tactical behavior of advertisers take hold as they learned how to navigate the pandemic, and programmatic was a key mechanism of giving them the confidence of increasing media spend as the year progressed. So how does this look like in terms of overall spend in Europe? Here's a sneak preview. We could see that the European programmatic ad market, no one would have believed it at the beginning of 2020, actually grew double-digit this year. Now, expect final figures, as I said, 24th of May, around a 26 billion euro market for programmatic in the widest sense in 2020. What do I mean with widest sense? We have 27 IABs contributing to our annual study, and there are probably as many definitions of programmatic as there are markets. Nothing is easy in programmatic. But there are two broad strands. And one is, let's include everything in programmatic that is not search, but automated. That includes also walled gardens where no external DSPs can go into, includes social, for instance. That's one definition, the wide definition. And others say no. In order to really understand the market dynamics, we need to look at the kind of open internet and just look at spend, for instance, transacted via the open RTB protocol. And we need a narrow definition of the market. At IAb Europe, we are a very consensual organization, and we try to cater to all needs and demands. And here is your view if we exclude social, if we exclude walled gardens that you cannot buy through a third-party DSP. So we see a smaller market, but a market that also grew healthily with just a 10.1% growth. This is good news, as we expect the overall digital ad market in Europe to have grown by around about 4.5% in 2020. So the transaction mechanisms subsumed under programmatic, auction-based and deal-based, fixed price-based, they both grew in excess of the market. And we'll speak later in this forum today about, in a sense, the programmatization of everything, of all media becoming programmatic. And a good example of the kind of rapid maturing of programmatic is video. So we now expect in Europe that around nearly kind of 2/3 of all video spend, and that includes everything from outstream to in-stream, from broadcaster video on demand to YouTube and other services, it grew healthily, and it is now the default of buying and selling video advertising. Video in 2020 was in a sense, a tale of two objectives. First, in the first half, we saw performance-driven video grow despite the pandemic. Short-termism prevailed, but in particular, as we saw many new companies starting that needed to sell, they needed to both sell and build brand, and therefore performance through audiovisual imagery. So therefore, performance-based video was a great tool to do that as the world shifted to an e-commerce model. But as the economy kind of returned, we saw also the return of brand advertising in H2, and in particular, programmatic video was fueled by the fact that many of the industry categories that were heavily exposed to the recession in 08, 09, particularly FMCG companies, that weren't hit that hard by COVID-19 in terms of revenue. So we saw big advertisers, Mondelez, P&G, and others actually ramp up their overall media spend and also doubling down on digital. And this was in the second half, including, for instance, insurance and finance spend, which was driving brand video. The streaming revolution clearly helped. And video, again, is an animal of many different shapes and colors. And included in here is, as much as we can, also CTV, where we can see programmatic models being a tiny minority yet, but both guaranteed and biddable mechanisms are growing, particularly on device UI, banner overlays, but they're also coming into other formats. It will take a while in Europe. We had our virtual Connected TV day just last week, but it's a good sign that more premium formats are becoming part of the programmatic ecosystem. Of course, this ecosystem is changing rapidly, and we're seeing the deprecation of third-party cookies. It's hard, though, to really put a value on how these third-party cookies have enabled or are fundamental to the world of programmatic. Different studies, different results. Some say, in a very small sample, it's a bit biased, not representative of the entire market, that it didn't really help much to use third-party cookie, in particular behavioral data. But others say it's quite the contrary. It has been a major driver. So even today, 10 years on, there isn't the one single conclusive evidence of the value that was delivered or the value, because we need to assess now what value we're losing. The good news is we're developing in terms of finding new ways of addressability for the programmatic world. The key thing to remember is that this new world will be built on many pillars. And who adopts these pillars and how they will be orchestrated together or separately is going to co-determine how fast programmatic is going to grow and which transaction models and which vendors in that space are going to win. We have everything from logged in users, which is authenticated clear identity of a shared IDs, still identity, to segments will already move into aggregates, to then flocks and then contextual. So many different ways of identifying, of classification in a sense, that programmatic has to deal with. But this is as much a challenge as it is an opportunity for innovation. And sometimes in the industry discussions that I see, which are very technical and highly constructive, I think we often lose sight of the fact that advertisers follow eyeballs, and no matter which model prevails, spend in digital and responsive interactive spend programmatically is going to continue to grow. We just have to find out how exactly and who is going to win in this world. First-party data is becoming increasingly relevant in this world. And I try to illustrate here, it's just a very schematic illustration, but which sectors so far are better positioned to take advantage of first-party data based on how close somebody is to the consumer transaction. And the good news is we can see, we take the US as a proxy just here, that the largest section of digital spend, retail, also sits very close to the consumer. Some sectors are still undecided in a sense, it varies company by company, but overall you can see a lot of sectors that are very strong in digital have the potential to develop very strong first-party data assets, which is good news for the future of programmatic. We're going to see a much faster reallocation in this new world come 2021 of spend, and namely where media, data, and attention really intersect. I tend to show this slide here or this chart here a lot because there's so much in there to unpack. If you look at the communications segment here, which includes PR but predominantly paid media, you can see across all media, it's fairly flat, mainly a redistribution game, but other things come in. Experience, commerce, and technology are all part of marketing. And if you look at the future world of first-party data, we can see that these growth areas are also locations of negotiation, where experience is where the consumer value exchange takes place. Commerce is a great location for first-party data and partnerships. Technology, a great way to fuse, to enrich, and so forth, in particular, if we think of the rise of data clean rooms at the moment. And that means new growth for programmatic and digital media in general. I think in several sections, retail media is going to grow rapidly. We see, of course, the walled gardens continuing to grow, but also new addressable media. Could be esports and gaming, connected TV, and so forth, in particular brand environments. And there's a huge chance, at least for, in particular, tier one publishers with first-party data assets on the sell side to win in this world as well. The jury isn't out, but these are potentials that the market can tap into. A key issue, and I mentioned it at the beginning, is the notion of transparency in programmatic. But let me say that transparency has always been a topic in all media and not something specific to programmatic. So when we think, for instance, about a seminal presentation in the US from an ANA by John Mandel, he talked about kickbacks in the US. And this was referring to all media, not specifically digital. And these deals are typical in other parts of the world because how clients remunerate agencies. So cultural questions, etc., fuel in there. We had a big study on transparency, again, in all media, sparked by this presentation in a way, where programmatic was just a small part of the discussion. But then we had, for instance, a lot of investment in an intention on the programmatic value chain, but a company or companies that were pioneering this shut out their doors due to lack of demand. We then saw an explosion of interest with the ISBA PwC study that many of you are aware of. We saw also the CMA moving into this, mainly from a competition and potentially antitrust perspective. And now we got a new ANA study. The RFP just came out just last week to look at specifically the programmatic value chain. Interestingly, in all of this is that how questions about what transparency is and what the programmatic value chain should deliver have completely changed. It moved from just financial audit to contract locations to what's the business model of programmatic, how can the media value of programmatic be maximized, working media, what about fraud, how can we use the chain to optimize, what is the competition in programmatic, and how can programmatic be used to fight disinformation. So many questions are being superimposed now on programmatic infrastructure. Issues that programmatic has to solve or issues that programmatic has the potential to contribute to. So both challenge and positive sentiment. Complexity remains a key component of the supply chain. Here is 25 advertisers. Of them were part of the ISBA PwC study where we did an analysis based on one publisher, and you can see over 1 year, the distinct number of supply paths that there are. So there's a lot of potential for cleanup, and the supply chain remains highly fragmented. But we call it from bug to feature. With complexity comes opportunity, in particular to optimize chains. So here, for instance, have two changed how that would look like, and you can really see the complexity from advertiser left to publisher on the right. And now SPO has been the call of the day for a long time now. Question is, what is SPO? How can we really take advantage of it? And how can we move it, as Tom Kershaw said, from a manual to an automated process? If we do this, we can really help convert the supply chain into a value chain, namely value add. And we have good news. We've got more controls through standards, through files, and also the discussion is changing, moving away from fees, saying fees are bad. That's not the case anymore, but what are the outcomes? Fees can be good if they deliver superior media outcomes. In particular, when we look at in-housing, when we look at outcome-based buying, we see a complete change in how the programmatic supply chain is being evaluated. Increasingly, we see a fragmentation of the chain as well. We see new, in particular, premium channels come in with proprietary DSPs and so forth. So in the future, I predict there's going to be more orchestration of distinct separate value chains than this one messy chain. And lastly, we have now more, in particular post-cookie, more ways to experiment and test and adapt to find the right patterns in the chain. Let me conclude with a view on what the future holds, in particular, the burgeoning e-commerce opportunity. I think a key thing in this world is that we have always of a marketing funnel. And there's a great presentation by Luma that introduced the concept of the cylinder. So how addressable media, walled garden, but also programmatic, can increase efficiency, scale, and efficiency at the end by reducing what goes into the funnel and maximizing what comes out. So reshaping it into a cylinder. And this is, I think, a key issue, in particular, when we look at the cost structure in e-commerce, where if you look at this waterfall here in the middle, services, general and administration here, this bucket 25 to 35% of the overall costs, this is something that's highly flexible. So 10% range, and marketing goes in here. So anything that can be done in digital advertising and in programmatic, in this case, to actually reduce the cost here can increase the overall EBITDA margin of e-commerce. So this is a great news and a great task for the industry to take on. And lastly, I think I mentioned already retail media. We all have seen the explosion of Amazon, but now we're seeing many retailers adapting programmatic models to take the kind of conventional supermarket trading agreements into the digital realm, either building proprietary and white label solutions or partnering with programmatic specialists. So beyond the usual formats of CTV, audio, digital out of home that's being programmaticized, we also see this new area of retail fueling the future growth of programmatic. And with that, I would like to conclude my little overview, my whistle-stop tour, and pass back to David. Thank you.